Hey everyone, happy Thursday, June 6th. It's about 9:15 in the morning on the West Coast, and it's time for another market update. A really busy week last week. We had inflation and jobs data, but it's actually been a good week for mortgage rates. So let's get right into it, going back to last Friday when we got the April PCE inflation report. Again, this is the Fed's favorite form of inflation, especially this core number, and they both came in as expected. The headline came in at plus 0.3% month over month. Core came in plus 0.2% month over month as estimated. A lot, right. So where does that leave us? The headline is down to 2.7% overall, and the core is down to 2.8%. Keep in mind the Fed, Chairman Powell keeps saying that the Fed's target with that core PCE inflation number, this 2.8, is 2%. That's where they're getting to. You can see we're making really good progress. Now we've kind of leveled off. We haven't really done much since December. Taking a look down the line, why we're probably not going to make much progress on this. So, the current, like I said, is 2.813. We'll get, next month when we get May's numbers, this last May will drop out. Last May was about it was about 2.88. If we add in what we think right now, what May's going to be, which is 2.3, our core PCE next month will be 2.755. The way they do this, they're going to round up when they report the numbers, so it's going to be 2.8 basically. So it'll look to the markets like there'll be no improvement, and so we can't expect to get a big jump there. And then if you look down the line, basically, how these year-over-year numbers work, we're replacing last year's numbers, and there's some pretty low numbers here, the 0.98. So even if they, each month comes in at a pretty conservative, month-over-month gain in the core of 0.2, you can see this will actually go up as time goes on, based on these replacement numbers. So either these estimates need to come in a lot lower than expected, or our core PCE number is not going to get any closer to that 2% number. And that is why, as I've been telling you guys, the job stuff is the most important. At this point, it doesn't look like we're going to be able to get to that core inflation number. Chairman Powell can keep talking about that, but the thing that will make them flip and maybe go the opposite direction is if we start seeing the labor market weaken quite a bit. And it seems like that might be the case based on some of the most recent data. So, the first one we got this week was April JOLTS report, which is job openings. And as you can see, it's the purple one here is the job openings. That's dropped off dramatically since its high point in late 2022. And it came in at a little over 8 million, 8.059 million. Was expected to come in about 8.34 million. So a big, under that number. And last month's numbers were actually revised lower by about 140,000. So job openings are dropping. The quit rate, this light blue one, is dropping. That's people basically saying, hey, I can go get another job. I'm going to quit this job. People are doing less and less of that, means they're less likely. Hires are down. So this JOLTS report, came a lot weaker than expected, which again is kind of in our favor, what we're looking for. The next one we got yesterday was ADP. This comes from private payrolls. It was expected to be about 175,000 jobs created. It came in 152,000, which again, weaker than expected. They made a slight revision to the previous month, negative again, which is the trend, from 192,000 jobs created to about 188,000. Job changers dropped. And again, that goes back to that quit rate. People leaving one job to go to another job. Job stayers staying about flat. So again, this one came in our favor. This is another good job report, that showed that, maybe it's, slacking off a little bit. And then tomorrow, we'll get into a little bit here in a second, but the April BLS jobs report is coming out tomorrow. That's the big one. That's the one where we get an unemployment number, things like that. So we'll cover that here in a second. Initial jobless came out today, higher than expected. Expected was 220,000, came in at 229. Still a relatively low number, but it's been ticking upwards, and continuing claims where people are still on unemployment after weeks it keeps going up. So that, again, kind of like indicating maybe this job market's starting to slow down, and hopefully the Fed pays attention. And the miscellaneous stuff, the Bank of Canada yesterday and the European Bank, the ECB, today, both made rate cuts. ECB, that was their first rate cut since 2019. So they came in. The ECB had a statement that the markets didn't really like, but these are two, global banks that have decided to start cutting rates. So the hope there is for us is we're next. Not only did they cut rates though, but I believe besides that it was Czechoslovakia, Switzerland, Sweden, Hungary, I believe did as well. So hopefully our Fed is next in line. But looking at the numbers, it doesn't look like that's going to be coming up at June 12th, which is the next meeting. Average 30-year, where does that leave us after a good week? We ticked back up to 7.29 at about 7.04 today. So a nice quarter of a point drop in over, about a week. And then, like I said, that BLS jobs report tomorrow will be the big one. Depending on how that goes, that could create a lot of positive or negative in the market. So like I said, BLS comes out June 7th. Then we get the CPI inflation report on the 12th, which would be that's next Wednesday. And then the Fed, their two-day meeting will conclude next Wednesday. They're not going to cut rates. I think it's at like 99.9 that things will stay the same. But depending on how this BLS jobs report, this inflation report, maybe, what they've seen over the last week, what they say in their statement, in their press conference, things like that, that's what we're going to have to pay really close attention to. And we're hoping that, along with, the data that's come out, these, foreign banks that are making these cuts, that hopefully, Chairman Powell starts to show that, hey, they're on the way to cutting rates too. But right now it's looking like, the earliest would be the September 18th meeting. There is a meeting towards the end of July. Maybe if things go our way between now and then, maybe that the expectation of the first rate cut coming in September moves up to that July one. I would say that's our best case scenario, what we really would hope for, unless like aliens attack over the next couple of days and the Fed decides to cut rates before next Wednesday. So if anybody needs anything at all, please don't hesitate to reach out. Otherwise, a great week. Let's hope it continues and rates keep coming down for us so we can get some more activity. Have a great week, everybody.